Good afternoon. Since the September meeting of the Monetary Policy Committee, global economic conditions have remained weak and global inflation low. Central banks in advanced economies provided more monetary accommodation, helping to ease global financing conditions, but further easing appears less likely. Downside risks from the heightened trade tensions and geopolitical developments remain. Despite a rebound in local GDP in the second quarter of this year, indicators suggest that economic activity will remain weak for the rest of the year. Recent monthly inflation has been lower than the midpoint of the inflation target range, as owners' equivalent rent, food and services inflation remain subdued. The year-on-year inflation rate, as measured by the Consumer Price Index for all urban areas, was 3.7% in October. Goods price inflation was 3.1%, while services price inflation remained at 4.2%. Food and non-alcoholic beverage price inflation slowed to 3.6%. The bank's measure of core inflation, which excludes food, fuel, and electricity, remains unchanged at 4%. Producer price inflation for final manufactured goods decreased to 4.1% in September. The medium-term inflation outlook is largely unchanged since September. The inflation forecast generated by the SARB quarterly projection model is unchanged compared to September, averaging 4.2% in 2019, 5.1% in 2020, and 4.7% in 2021. Headline inflation, CPI inflation is expected to peak at 5.3% in the first quarter of 2020 and settle at 4.5% in the last quarter of 2021. The forecast for core inflation is lower at 4.2% in 2019, at 4.5% in 2020, and remains steady at 4.6% in 2021. Food price inflation continues to surprise to the downside on a monthly basis and is expected to peak at about 6.1% in the third quarter of 2020. Inflation expectations continued to moderate gradually. According to the Bureau for Economic Research, third quarter survey, expectations for headline inflation are down slightly for 2019 to 4.6%. Expectations for 2020 remain unchanged at 5% and eased from 5.2% to 5.1% for 2021, reaching the lowest level since 2007. Five-year ahead inflation expectations also decreased to 5%. The inflation expectations of market analysts in the November 2019 Reuters Econometer survey remain unchanged at 4.3% for 2019, revised lower to 4.7% for 2020, and are unchanged at 4.8% in 2021. Market-based expectations implicit in the break-even inflation rates, that is the yield differential between conventional and inflation-linked bonds, have moderated somewhat since the previous MPC. Five-year break-even rates are currently about 4.5%, and 10-year break-even yield rates are at 5.4%. Global GDP is expected to average 3% in 2019, rising to about 3.4% in 2020. While trade and manufacturing indicators continue to be weak, services have remained more resilient, keeping overall global growth rates up. However, services have shown weakness in some regions, and a range of downside risks to growth remain. These include geopolitical developments, trade tensions, further oil price shocks, and high levels of corporate and sovereign debt. Across most countries, there is limited policy space to respond to shocks. Inflation outcomes and inflation expectations in most advanced economies remain below targeted levels. Barring significant shocks, monetary policy in major advanced economies will remain accommodative over the medium term. While global financial market sentiment has turned more positive in recent weeks, the risk of renewed market volatility remains high. Since the September MPC, the rand has depreciated slightly by 0.6% against the US dollar and by 0.8% against the euro. The implied starting point for the rand is 14 rands 94 against the US dollar, compared with 14 rands 88 at the time of the previous meeting. While the rand has benefited from improvements in global sentiment, investors remain concerned about domestic growth prospects and fiscal risks. Although GDP growth rebounded to 3.1% in the second quarter, longer-term weakness in most sectors remains a serious concern. Based on recent short-term economic indicators for mining and manufacturing sectors, the third quarter GDP outcome is expected to be weak. Public sector investment has declined. Export growth remains low, whereas government and household consumption continue to grow, albeit modestly. Business confidence remains weak. The RMB BER Business Confidence Index fell to 21 points, while the ABSA Purchasing Managers Index rose to 48.1 points in October. The SARB's Composite Leading Business Cycle Indicator also continued to trend lower. The forecast of GDP growth for 2019 is revised lower at 0.5%. The forecast for 2020 and 2021 have decreased to 1.4% and 1.7% respectively, due to lower growth than previously expected in the third and fourth quarters and downward revisions to global growth. The MPC assesses the risks to the growth forecast to be to the downside. Escalation in global trade tensions, geopolitical risks, further domestic supply constraints, and or sustained higher oil prices could generate headwinds to growth. Public sector financing needs have risen, thus raising the prospect of further pressure on the currency and pushing borrowing costs for the broader economy higher. Implementation of prudent macroeconomic policies and structural reforms that lower costs and increase investment, potential growth and job creation remains urgent. The overall risks to the inflation outlook are assessed to be balanced, but uncertainty about inflation risks is unusually high. Demand-side pressures remain subdued, and house rental prices are expected to increase at only moderate rates. Global inflation should also remain low. Food price inflation has continued to surprise to the downside, but rising imported food prices and uncertain domestic weather patterns raise uncertainty about the future price trajectory. Further upside risks to the inflation outlook include wage growth and fuel, electricity, and water prices. The risk of further capital flow volatility has also increased, which could put pressure on the exchange rate. The MPC welcomes the sustained moderation in inflation outcomes and inflation expectations, and would like to see inflation expectations anchored closer to the midpoint of the inflation target range on a sustained basis. Against this backdrop, the MPC decided to keep the repurchase rate unchanged at 6.5% per annum. 3 members preferred to keep interest rates on hold, and 2 members preferred a cut of 25 basis points. Monetary policy actions will continue to focus on anchoring inflation expectations near the midpoint of the inflation target range in the interests of balanced and sustainable growth. In this persistently uncertain environment, future policy decisions will continue to be highly data dependent, sensitive to the balance of risks to the outlook, and will seek to look through temporary price shocks. The implied path of policy rates over the forecast period, generated by the quarterly projection model, indicated 1 repo cut of 25 basis points in the 3rd quarter of 2020. This remains a broad policy guide which could change in either direction from meeting to meeting in response to new developments and changing data and risks. That concludes our statement.